Matthew, the International Monetary Fund says world growth will slow to 3.7% in 2008 and is pessimistic about things picking up in 2009. Where does that leave Australia?
Well, economic growth has slowed across all regions and domestically interest rates are at 12-year highs. But on the positive side, growth in China and India, two of our major trading partners, remains very robust. As a result, our terms of trade are forecast to rise by 15%, getting very large tax cuts on the 1st of July. So overall, we expect the growth for the Australian economy to slow to around 3 to 3.5%.
To what extent does the repricing of risk affect asset allocation strategies in Australia?
Oh, well, since the November peak to the March trough, Australian shares fell 26%, the global share market's down 21%. And during that period, you would be hoping that your fund manager was underweight growth assets. But at some point in the future, valuations in both these markets are going to get to such attractive levels, you'd actually be wanting your fund manager to go overweight. Where that point is, there's a lot of debate around at present, but we do know that at some point it is going to occur, and at that stage that you want your portfolio's position to take advantage of that.
Matthew, do you see any overall improvement in investment markets occurring in the foreseeable future?
Well, over the short term, markets tend to trade on sentiment rather than fundamentals, and we do know there's a lot of bad news to come out of America, and we're going to have to stomach that in the first half of the year. But at the same time, valuations are the best that we've seen for many years, so we're seeing this short-term opportunity as the time to set your portfolios up for the next 3 to 5 years.
Broadly speaking, where do you see the investment opportunities now and in the longer term?
Well, over the last 150 years, share markets have demonstrated that the best time to buy is when the blood's on the street. That's when you can make the most money. Now, history has also demonstrated that through these times, quality companies get you through. So a company like a Walmart, even though it's exposed to a US consumer, has risen 10% in 2008, whereas the US share market is down by 10%. So exposure to quality companies such as Walmart will get you through tough times and give you a steadfast foundation for the long term.
Matthew, what are Australia's strengths in the current climate?
Well, we have a very strong economy, and this economy has high exposure to emerging economies such as China and India, and that's going to help our exports in 2008. At the same time, we have a very sound financial system. Banks are well capitalised, they don't have any liquidity problems. Meanwhile, corporate balance sheets are strong, businesses are cashed up, they have low debt, and also we have a very strong fiscal position. And that really means that we can weather the current storms that are in the global economy, and that's a really good backdrop for asset markets to be working off despite their recent volatility.
Finally, Matthew, what will you be discussing in your presentation to the Asset Allocation and Risk Management Forum 2008 in Sydney on May the 22nd and 23rd?
Well, I'll initially be having a look at the backdrop to the rise in global volatility. Then we'll have a look at the very important question of whether China can uphold global growth by itself if the US experienced a very deep and prolonged recession. After that, I'll have a look at such things as the sustainability of the mining boom, and I'll close off by asking myself where are the opportunities that falling share markets always throw up for investors.
Terrific. Thanks very much, Matthew. We look forward to seeing you at the conference.
Thank you. Look forward to it.